Good evening to all the attendees. Milagres College, Mangalore, Padua College of Commerce and Management, Government First Grade College, Kavoor, in association with the IQAC, is pleased to organize a 5 days faculty development program on contemporary issues in
I think now madam is stuck. Shravya madam, I think you can
Yeah,
start.
I have. Yes, sir. Am I audible now? Yes, there was a little network issues. I request Mrs. Glancha Fernandez, HOD of Commerce, to welcome everyone.
Thank you, Shravya Madam. Good evening, all. It is my pleasure to welcome all the participants who are present today. As Miss Shravya has told, we are in collaboration with the Padua College of Commerce and Management, Mangalore, and GFGC Kavoor. In association with IQAC, are pleased to welcome the participants of today's session, Faculty Development Program for Assessment in Goods and Service Tax. We are having a resource person as CA Anwesh Shetty, Chartered Accountant. He is a practicing Chartered Accountant based from Mangalore. Also, he has trained more than 30,000 students in both online and offline mode of teaching. He has done his articleship with the CA. He is presently pursuing LLB in Karnataka State Law University, PhD in GST on Real Estate Industry and ACCA. We welcome you, sir, on behalf of our college management for the first series of FDP. Also, I welcome our Principal Reverend Father Michael Santumayer and Padua College Principal Reverend Father Arun Wilson Lobo, GFGC Kavoor Principal Dr. Shivaram P. Also, I welcome all the participants who are present here and also in YouTube channel. Welcome all of you.
Thank you, Glanchia ma'am. A hearty welcome to you as well. Now I request Reverend Father Michael Santumayer, the principal of Milagres College, to give away his message. Father, we can't hear you.
Okay. Good evening, one and all. On behalf of Milagres College, Padua College, and Government College, Kavoor, I take this privilege to welcome you all and wish you all the best. This topic is very relevant. Contemporary issues in taxation, investment, banking, and analytics. That is the important issues of this time. There are prominent and experts are here. Especially we have a guide in this field, Manoj Uluvi sir, who has been always inspiration for us all to conduct this FDP because he has been a source of all knowledge here. Therefore, such people are here, and the principals and all the staff members of all the colleges, I welcome you and wish you all the best. God bless you. Let us learn from these 5 days FDP. Thank you, one and all.
Thank you, Father. Today we have an important session which will be taken by our resource person, CA Anwesh Shetty, on the topic Assessment in Goods and Service Tax. Over to you, sir.
Thank you, everyone. At the very outset, let us get our rituals correct. So, am I visible? Yes. Or am I audible? All right. So, now I'll be just going ahead and sharing my screen. Please confirm if, 1 second, your the window. Tab.
So before you begin, I would just like to instruct everyone, kindly keep your mics switched off and the cameras on, and question and answers sessions will be at the end. So kindly keep all the questions on the hold. And I request no one to leave the meeting in middle, and at the end there will be a feedback link sent in the meet. And all of you all need to fill in that feedback link. Only then certificates will be provided at the end of the 5th day. Yes, sir.
All right. So, whether my screen is visible?
Perfect. You can go ahead, Anwesh.
Okay. So, the switching of screen is also visible, correct?
Yes.
Okay. So, very good evening to all of you. I understand that the audience here today are from a commerce background itself. So, it is one of the very interesting topic today I've got to deal with, that is issues in GST or relevant issues in GST. So, now let us start. See, when in 2017, when GST was rolled out, it came with a proposal stating that it is going to unify all the various taxes. And they are going to lay down certain simple procedures that you have to comply. And once you comply it, you don't have to read various different laws. Reading only one law would be enough. So there is not going to be unnecessary litigation. There is not going to be unnecessary fight between the SSA and the government. So this was the promise that was made in Constitution itself. And then the GST law was rolled out. Now today, when we look back at 2017-18, we look at 18-19, we look at 19-20, certain strange aspects come before us. Let us start. I want to keep this session as practical as possible. I would not discuss much into theory, and whatever the little bit of practical experience that I have gained over the number of years, I would want to share with you. So at any point of time, if you have questions, you can stop and ask, but I would prefer if you keep it at the end, so that we can take all the questions at once and we can answer this question. So I remember way back in 17-18 when GST law was rolled out, and if you read the book of the GST law, it promised certain things. It said, we are going to have GSTR 1, that is going to be the return where you declare all your outward supplies, all the sale that you make, we are going to declare in GSTR 1. At the same time, you'll also have something called as GSTR 2, which will reflect all the purchases that is made by you. And GSTR 3 is going to be automatically filled up, and it is going to be a click of a button, you click it, the return is going to be filed. So this was the initial concept that came in. But we are aware what basically happened in 2017-18. In 17-18, the portal was not ready. And I have had scenarios where a client has gone to tax department and consulted the tax officer. He did not even trust his own CA or accountant saying that portal is not working properly. So he went to the tax officer himself and he said, sir, please file my GST returns. And here is the data. So where the tax officer and the client sat together and tax officer entered all the details and he pressed enter and the return was filed. So when they entered the data, all the information they had entered into that particular return. But because of some portal issues, when he checked after 1 year, the field was, everything was submitted as 00000. So now, what is the issue here? So let me give an example. Let us say in 2017-18, in the month of July or in the month of August, he would have had, let us say, 10 lakh rupees of input tax credit. Now, if he went and he filed that GST return also, but because of technical error, the portal just showed 000 in all the fields. After 1 year, he realized this mistake. And after 1 year, he again claimed his input tax credit. Now the question that I would want to ask the audience is, can he claim ITC after 1 year? Okay, I would want some response. Let it be an interactive session.
I believe so, no.
Okay.
But then because of the initial teething issues, maybe he might have been given an opportunity.
Okay. So now, whenever we talk about input tax credit, now what is input tax credit? In simple word, whenever I am purchasing either goods or services or capital goods, whatever the tax I pay, the government will allow me to take the credit of it, and in future they will allow me to adjust it. Now, in earlier tax laws, in earlier VAT laws, in earlier service tax, and in earlier excise laws, the concept of input tax credit was not that complicated. But if you look at ITC portion today, it is not less than a snake and ladder game. Now, if you can picture of a snake and ladder game, every time you roll down your dice, you go up, but again there will be one snake and you again come down. And again you try going up, but again you'll be bitten by another snake and you start coming down. So time and again your whole month or your whole year will be wasted in just trying to reach 100, but you will never reach 100. So there is one provision in GST, that is section 16 subsection 4. And it says, a registered person, okay, you shall not be entitled to take ITC in respect of any invoice or debit note for supply of goods or services or both after 30th of November of the following financial year. So earlier, if you remember, it was not 30th of November. This is the change that happened in the recent budget. Earlier, it was the return of the month September that they would say it. Okay. So now section 64, section 16, subsection 4 says that after 30th of November, you will not be entitled to claim input tax credit. So they have put a deadline for you. So now you ask yourself, can input tax credit come with an expiry date? Now, earlier, there was a Supreme Court judgment in the case of Aisha Motors, where Supreme Court told, this was in the time of earlier excise law. So where the Supreme Court categorically told input tax credit means a vested right. So vested right means the right that you already have. So once you have a right with you, it can't be taken away. So now the question is, can the right be taken away by virtue of this section 16 subsection 4? Okay, because this is something normally we teach in our classroom as well, that some conditions has to be satisfied. This time limit is one of the condition. So here, to put things more in perspective, I have given one numbers also, and I want all the faculties to try answering this. If possible, loud, or at least in your mind, you should answer this question. Mr. Aditya had GST liability of 1 crore for financial year 21-22. Now we are not even talking about 17-18. That initial teething issue is not there. So we are talking about financial year 21-22. Aditya had to pay 1 crore rupees of GST, but he had input tax credit of 99 lakh rupees. Okay, but for some reason he could not file his return of 21-22 in 21-22. So he filed it in 23-24. That is after 2 years he has filed it. So now the question is, should he pay whole 1 crore rupees in cash, or can he avail that 99 lakh rupees of credit and has to pay only 1 lakh rupees in cash? What is that you feel? Any answers? Okay. So, okay. So somebody told it is just 1 lakh that as per section 16.4 he cannot. Somebody says by virtue of section 16.4 he has to pay 1 crore rupees. All right. So there are a lot of answers that are coming. I really appreciate it. Thank you for all the answers. Now, let us do the actual reading of the law. So, there is another section called as section 16 subsection 2. Okay. Now, section 16 is the mother section. When I say mother section, that means section 16 only talks about who can avail ITC, when one can avail ITC, when one cannot avail ITC. So everything is told in section 16 too. Or sorry, it is told in section 16. So section 16 has 4 subsections. Okay. So section 16 subsection 2 talks about notwithstanding anything contained in this section. Now, what is the relevance of these words? That is, notwithstanding anything contained in this section. So whenever we do a literal interpretation of the law, whenever a sentence starts with the word notwithstanding, that means it is a non-obstante clause. We must have studied this in our contract law as well. So whenever a law begins with the word notwithstanding, that means this section or this subsection is a overriding section. Okay. So now if there are 2 sections, that is section 16.2 tells you have to follow some conditions to avail ITC. And also there is section 16.4, which says you also have to follow some conditions to avail ITC. Now, which one should you listen to? Should you listen to section 16.2 or should you listen to section 16.4 or option number 3, that is you should listen to 16.2 as well as 16.4. What is that you feel? You can unmute and answer as well, no problem. And again, for the benefit of everybody, let me just try, simplifying the definition of what do you mean by notwithstanding. So let us say, in a class, there is a class leader and then there is an academic advisor. Okay. So now, if the academic advisor says, don't come to class tomorrow, and if the class leader says, come to class tomorrow, okay? So the teacher is saying, don't come to class. Student representative is saying, come to class. So there are 2 people talking 2 different things. So now the question is, whom you should listen to? That is, should you listen to the class teacher or should you listen to the class leader? So the answer is very simple. You should listen to the class teacher because the authority of the class teacher is higher than that of the class leader. Now, here it is very simple for us to understand because there is a clear distinction between class leader and the class teacher. But whenever we look at the law, everything is printed in the same font. So we don't know which is the superior section and which is the subordinate section. So in the law itself, they clearly write which is the superior section. So if the law begins with the word notwithstanding anything, then it means that section is the superior section. And all the other sections are the subordinate sections. So here, section 16.2 says, notwithstanding anything contained in the section. That means, notwithstanding anything that is told in section 16.3, notwithstanding anything that is told in section 16.4, you follow these 5 conditions and you can claim input tax credit. Okay. So, section 16.4, that restriction should not legally apply. So now, again, in the classroom when you are teaching, it is always better to say that after 30th of November, you can't claim input tax credit because that is what the student should learn. But whenever we are talking about the real world scenario, whenever we are actually facing assessment, we normally take this ground stating that the restriction that is put under section 16.4, which talks about time limit, should not apply to us because section 16.2 says it is a notwithstanding section. Section 16.4, after all, is a subordinate section. We need not follow this. So if it is clear, we can go to the next aspect. Okay.
So in simple, ITC is allowed if these 5 conditions are fulfilled.
ITC is allowed. Okay. So this is one argument that we normally take. Now, what would be the another argument that we take is, whenever, let us say, that I made a delay of 1 year of filing my GST returns, or there is a delay of 2 years of filing the return, government will not allow me, where a department website will not allow me to file my return until I pay my late fee. So the moment I pay my late fees, that means my delay has been condoned. It has been forgiven. So it is something like this. Imagine in your college, you have this policy that if a student does not have 90% attendance, we will not allow him to write the examination. But if a student has 85%, then college may have a policy stating that you have to pay fine of 5,000 rupees. Once you pay the fine of 5,000 rupees, your attendance shortage is condoned. So now if the student pays that 5,000 rupees, can the college again come and say, we will not allow you to sit for your examination? The answer would be negative, because once the student has paid that fees, once the student has paid that penalty, he has regularized his mistake. So similarly, whenever we file our return, even if there is a delay, the moment we pay our late fee, the delay is condoned. So once the delay is condoned, my input tax credit cannot be restricted. So I see one wonderful question being asked, then what is the relevance of section 16 subsection 4? Section 16 subsection 4 being directly contrary to section 16.2 has no relevance at all. Because if section 16.2 did not start with notwithstanding anything, then section 16.4 would have had some life. But whenever there is a section which contradicts with section 16.2, the contradicting section will not survive. Okay. So again, this is only when we are taking the litigative stand. So many writs are filed in various high courts and we are awaiting for the outcome. Some of the high courts have already given an interim relief, but we are waiting for the outcome of this case. Okay. Next. Here, also one more practical difficulty is, normally when we read the law, okay, I'll again go back to this scenario. Second, yes. I will go back to this scenario. So here we are talking about, I have a liability of 1 crore rupees, but I have 99 lakh rupees with ITC with me, but I don't have remaining 1 lakh rupees of cash. So can I file my GST returns or can I not file my GST returns? So can I file my return stating that I had to pay 1 crore rupees, but 99 lakh rupees of ITC I have, 1 lakh rupees balance I have, which I will pay in future. Can I declare like this and file my return? Earlier in service tax, this was possible. Service tax return would allow you to file the return declaring what your liability is. Even if you had not paid it, it is still okay. You could still file the return. Because what is written? After all, it is giving information to the department. But today, GST law does not stop you from doing this. GST law will still say the same thing. You claim 99 lakh rupees of credit and file the return. But GSTIN portal, the website that we have, will not allow you to file the return without paying that 1 lakh rupees in cash. Okay. So most of the SSCs, because they did not have this working capital at that moment of time, delayed filing their return, and because of that delay, they are served with hundreds of notices under section 16 subsection 4 stating that you are availing credit after the due date, we will not allow you to claim the credit. So here you can take a stand. Okay. So that is as far as section 16 is concerned. Now, if this is clear, I will go with the next concept. Okay. Now, this is one of my favorite topics, that is discrepancy in e-way bill. I'll give one very practical example of what happened. Two examples I'll give. In one of the case, client got a new truck. Okay. So new truck, you remember, if you see, it will not have a vehicle number. It will have only one sticker in front of him, something called as temporary, TEMP. That's it. So it was a new truck that came there. And the owner wanted to do boni. So he's like, why this truck has to stop? Let me carry the goods from place A to place B in this truck only. But now comes the question, what he should declare in that e-way bill, because in e-way bill there is part B where you're supposed to mention the vehicle number. So there is no vehicle number as such. So he just declared, just like one normal person, okay, he declared vehicle number as KA19 because he thought, okay, if it is Mangalore registration, the registration number will start with KA19 and rest 4-digit he put it as 0000 because it does not have a registration number. Unfortunately, the vehicle was stopped and officer asked, where is the vehicle number? Owner said, even I don't know where is the vehicle number. There is no vehicle number. Officer went on to detain the vehicle. Okay. This is one scenario. Second scenario is a client purchased the goods from out of state. Okay, from other state, truck came to the factory gate of the client. Now, client told that don't take your truck inside the factory, inside the gate of the factory, let it station outside only. Because early in the morning, 2-3 trucks have to go out. So if you park at the gate, the trucks will not be able to, pass, and we can't find you early in the morning at 3-4 o'clock. So do one thing, park at the gate. And once they go out, you can get it inside. So the driver also said, okay, and he parked the gate. Department came. Department saw the truck at the gate of the factory. And they said, the e-way bill is expired. It was taken. So as you all are aware, e-way bill has a short life, depending on the distance, either 1 day or a 2 day or a 3 day. Within that days of time, the goods have to leave from one place and reach another place. So now what our department says, the e-way bill was valid till yesterday. And we told, yes, sir, yesterday only the vehicle had come. And the officer says, yes, but did the vehicle reach the destination? We said, yes, sir, it is there at the factory. He said, it is not inside the factory. It is at the gate of the factory. Gate of the factory is not factory. Hence, we are again detaining your vehicle. Okay. Now, we may feel that, okay, now this is, even if he's going to detain, what maximum he can do? I may not wear helmet and go outside. An officer may catch and levy a fine of 500, 1,000 or 2,000. So if there is all these small errors, what could be the consequence? So your kind attention is invited to section 129 of GST Act. Okay. So it says, it talks about two circumstances. Okay. It talks about two circumstances. It says, if owner comes forward, it is 200% of tax is the penalty. For example, let us say, okay, I'll give an example. So here, okay. Now let us say, Mr. Karan was carrying goods without proper e-way bill. Maybe let us say there is a wrong vehicle number. He has written KA190000. So this is the scenario. So the value of the goods in his vehicle, in his truck, let us say it is 10 lakh rupees. And if you're assuming the rate of tax was 18%, then the tax was 1,80,000 rupees. So just because you have mentioned your vehicle number wrong, there can be a penalty of 3,60,000 rupees. Okay. So this is where when the owner comes forward, Now what do you literally mean by owner coming forward and owner not coming forward is, normally sometimes what happens is if you're carrying your truck without proper document, and the moment the officer stops your vehicle, the drivers will leave the vehicle and run somewhere, and nobody will come and say that this is my truck, this is my goods. So it is a headache for the officer to trace who is the actual owner of the goods. So they said, if owner comes forward and admits that this is his goods, then the penalty is 200% of the tax. So in this case, there is 3,60,000 rupees. But if it does not come forward, okay, it does not mean that they are going to leave you. They will find who you are, and then it is either 200% of the tax or 50% of the value of the goods. So value of the goods in our case was 10 lakh rupees. So 50% of that value would become 5 lakh. So here, So if the owner does not come forward, it is 5 lakh rupees is going to be the penalty. Then comes the third question, whether there is discretion for the officer or not. Normally we happen to come across in traffic police cases that sir bitbidi sir ಸ್ವಲ್ಪ ಕಡಿಮೆ ಹಾಕಿ sir, these are the things that we say. But the question is in GST whether the officer does he have a discretion. Answer is absolutely no. It is law says it is 200% means 200%. He can't even do 199% even if you are his close friend. So now, so even the smallest of the smallest mistake may result in lakhs of penalty. Now, then comes a question. Fine. If I pay 3,60,000, is it the end of it? Answer is no. 129 is just the beginning of the proceeding. Officer can go ahead and start section 130 as well. Now, what is the difference between 129 and 130? 129 doesn't even require an intention to evade payment of tax. So somebody did not know the vehicle number, that is where he has written 0000. So there is no intention to not pay the tax. So that time 200% of tax payable will be the penalty. Now if officer for some reason feels that you have written 0000 because you wanted to evade payment of tax, again he does not have to prove it. If he writes a statement saying that you intended to evade payment of tax, it is proof by itself. So if he says, I will do first 129 on you and collect that 3,60,000 from you, plus I'll also give you one more notice under section 130, then can he do so? Answer is, earlier the law did not allow the officer to do both together. Okay, so it was not 129 and 130 they could not do together. But today when you read the law, 129 and 130 can happen simultaneously. So what 130 does is, here also officer has the power to levy tax minimum of 200%. It can go maximum up to the value of goods itself. Okay, so a simple mistake of writing a wrong vehicle number can result in outflow of around 13 to 14 lakh rupees from your pocket in these type of scenarios. And this is in all the GST litigation, 90% of the litigation are because of the e-way bill cases. Okay, so we have to be extremely careful. Whenever we are training our students, we need to tell them it is not the hyper technical aspects of the law that matters. Filling up the invoice, the details that they mention in the invoice, the destination place, the vehicle number, the description of the goods, the tax rate, these minute things that matter the most. Okay, so now let us go to the next aspect.
Anwesh, can I ask two questions, quick
Yes,
questions?
please.
Now, when I am typing out the vehicle number,
Yes.
okay, and as soon as it is typed, and I realize I made a mistake, can I change then and there?
Yes. Modifications in e-way bill is permissible.
Okay. And the second question, you mentioned about owner coming and saying it is my vehicle. Now, when we talk about big corporates, definitely owner need not. So can a manager represent an owner and say this is of the company?
Yes. So now that is one of the points that we normally take in a litigation aspect. Now, owner does not necessarily mean that owner himself has to come forward. An authorized representative or the manager can come forward. But then comes the question, who is the owner? So now we have to go back to Sale of Goods Act, because a seller might have sent the goods to the buyer, and in the middle the goods have been seized. So now comes the question, who has to come forward? Whether should the buyer has to come forward or the seller has to come forward? So normally department, without even looking at the facts of the case, in 90% of scenarios, they would keep issuing notices to the seller himself. But in Sale of Goods Act, we clearly identify that when the risk has been transferred, it goes back to the terms of the sale. So if risk is already transferred, they cannot give notice to the seller. If they do so, then the notice becomes bad and you can win that particular case. Okay, so that is as far as 129 is concern. So in 130, what happens is officer has the power to either confiscate the whole vehicle as well as the goods, one option, or he can give you another option to pay the fine. The fine can be the value of the goods minus the tax value. So if the value of the goods is 10 lakh rupees minus tax value is 1 lakh 80, so you have to pay an additional fine of 8 lakh 20,000 or the minimum fine of 3 lakh 60,000. He has the discretion here in 130, but in 129 he does not have the discretion. Okay. Now this is one of the most interesting aspect. Now I am sure in the classroom, whenever we are dealing with the computation of interest on GST, we have always calculated this. Now I want to pose a question as to what do you mean by interest? So even in a 5th, 4th standard that we studied, so interest computation is, it is principal into time into rate. Okay, divided by 100, we will get the interest component. Now principal amount, how do we get? Now again, there is a discussion, should we pay it on the gross value or the net value? That I'll do it in the next slide. But in this slide, I want to talk about how do you compute the time. So time is actual days of delay. For the delay, you pay the interest. So it is actual date of payment minus the due date of payment. So now the question is, what do you mean by due date of payment? Nowhere in GST law, in whole of the GST law, they have mentioned what is the due date of payment. So they have told what is the due date of filing the return. But we must appreciate the fact that filing of the return is different from date of payment. So when the law does not specify what is the due date of payment, how can I assume what is the due date of the payment? So now to give things in better perspective, there was one most popular case in the case of BC Srinivasa Shetty. It is not Shetty, it is Shetty, S-E-T-T-Y. So the case was in relation to income tax. In income tax, we are talking about capital gain computation. So if I'm purchasing, let us say, one piece of land for 10 lakh rupees, and if I'm selling it for 15 lakh rupees, I know that my profit is 5 lakh rupees and I have to pay tax on that. Now, my question is, if I'm going to sell goodwill of the firm, okay, what is the value? So goodwill, if I'm going to sell it to an outsider, I know what is a sale consideration, because that is what is the money that I'm going to receive, that is a sale consideration. But what is the cost of acquisition? Now, law never provided what was the cost of acquisition. So they amended the law and they inserted a provision and they said, cost of acquisition of goodwill for the purpose of capital gain computation is nil. Okay. So cost of acquisition of goodwill for the purpose of business is nil. Okay. So now if a business were to sell its goodwill for 10 lakh rupees, so it will be 10 lakh rupees minus 0. It is going to be still 10 lakh rupees only. But there was one professional firm. So they sold their goodwill. So the tax department said, you also have to pay tax on that goodwill. But the professional firm said, sir, please refer the Income Tax Act. It says cost of goodwill of the firm is nil. Sorry, cost of goodwill of business is nil. Okay. So ours is not business. Ours is firm. So ours is profession. So there is a distinction between a business and a profession. Because there is a distinction, we will not pay the tax. And the High Court said that argument as a correct argument. So taking the same argument here also, when the law does not say what is the due date of payment, how do I know on what date I'm supposed to make the payment? So if the law is vague, the machinery provision will fail. If the machinery fail, the collection will fail. Okay, so that is as far as due date of payment is concerned. Now this is one more burning issues that we are normally facing in our day-to-day assessment life. So now I want everybody to picturize and give me answer for this. Let us say I have 1 lakh rupees with me. That is there in my bank account. Okay, let us say I have my bank account in Canara Bank. Now I had to pay GST of 1 lakh rupees. So what I did, I went to my GST website, I filled up one challan and I added all the details and added the money to my cash ledger. Okay, so think of cash ledger like your Paytm wallet. Okay, so first money will go from your bank account and it will go to the wallet, and from wallet you can do all the recharges that you want. Okay, but Paytm wallet is still your wallet, because if you want you can withdraw that money, you can transfer to whomever you want to do. Okay, but whenever we are talking about GST wallet, what we normally call it is electronic cash ledger. Okay, so today I deposit 1 lakh rupees to cash ledger, and the money is sitting still in my cash ledger because for some reason I forgot that from cash ledger I had to pass one more adjustment entry in my return. Okay, now again, to simplify it for the benefit of everybody, let's understand something like this. Okay, imagine this is 1 lakh rupees that I have in my hand. Okay, so this I deposited to GST website. Now, whenever I deposit into GST website, it will go and sit in one ledger called as electronic cash ledger. So the money is not with me, it is in electronic cash ledger. Now at the end of the month, I have to file my return. Okay, in that return, I have to transfer this electronic cash ledger balance to adjust with my liability ledger. Okay, now if I fail to do so, can department ask interest from me? So on 20th, I had to pay the tax. On 20th, I have uploaded this money to electronic cash ledger. On 30th, I have filed my return. So can department say you have delayed in payment of tax by 10 days and then you have to pay interest for 10 days? Or can I take an argument saying that the money has already left my account and it has gone to your account? So because money has already reached you, just because I did not file the return, you can't demand interest portion from me. So normally even we were under this impression stating that once I have deposited money into cash ledger, the tax is paid. But recently there is a High Court judgment which says that deposit into cash ledger is not equivalent to payment of tax. So even if you have delayed for 10-15 days of filing your return, you have to pay interest on the same. So as we are discussing on interest, let me go into another interesting aspect of computation of interest. All right. So now here, so earlier there was this discussion. Okay, I want response from the audience for this question because this will be there in your classroom as well. So imagine a scenario that in the month of January 2020, I had to pay 1 lakh rupees of GST. So my gross GST liability was 1 lakh rupees. Okay. Now, I filed the return for the month of January only, but I filed after 40 days. Somewhere in April, I filed this, or somewhere in March, I filed this. Okay. Now, I had ITC of 95,000 rupees. So, net cash, I paid 5,000 rupees. Okay. I paid a net cash of 5,000 rupees. So, now my question to you is, whether the interest, should it be calculated on this 5,000 rupees or should it be calculated on 1 lakh rupees? What should be the answer? Okay. So I got one answer that said entire 1 lakh rupees. Nice. Is there any other answer?
According to me, it should be on 5,000, but since income tax, whichever is less from our point of view, whichever is more from their point of view, so it should be 1 lakh rupees. Simple as that.
So this was a burning issue right from day one of GST, because SSAs were arguing, what is interest? Interest means compensation. Now, what is compensation? If government were to say that you did not pay me 1 lakh rupees, so you paid after 40 days. So for 40 days, I did not have 1 lakh rupees. So compensate me for that delay. I will pay the interest. But out of that 1 lakh rupees, 95,000 is ITC. That means that money is already received. My supplier has already given to you. So what is that you are losing? Only 5,000 rupees you did not get it. So only on that 5,000 rupees you charge the interest. Now this argument was for the first time was taken in Telangana, the Andhra High Court. So where in the case of mega engineering, High Court said no. Law clearly says pay it on 1 lakh rupees, you pay it on 1 lakh rupees. So no argument. So pay it on the gross value. ITC and all don't bring here. 1 lakh rupees you had to pay, you did not pay. So pay interest on 1 lakh rupees. So that was the argument. Then there were a lot of hue and cry in the general public saying that this is a draconian provision and all. So they amended section 50. And now they say it is not on the gross liability, but on the net liability. But there also there is a catch. Government is not innocent as it tries to portray itself to be. So if you read the fine text of the law, it says January month's return, you file it late, no problem. So January month's return, you file it as January month's return only. See, normally what happens is GST, every month you file the return. So sometimes what people do is, if they don't have money in the month of January, in January they file something called as nil return. They will say, I don't have liability, they will file nil return. And then while filing February return, they will also add January dues as well as February dues and they pay it. Okay. So it is like, and again, this will be little complicated if you are not regularly used to file your return. So think like this. If a student is in his 11th standard, he has to pay 11th standard fees. If he goes to 12th standard, he has to pay 12th standard fees. Now, let us say that the college allows students to stay, you study 11th and you study 12th. So while leaving 12th, you can pay off 11th as well as 12th. But it is up to you, how do you want to fill up the payment form? Do you want to use only one form for both the years? Or do you want to use two different forms? So if you are saying, all right, after completing 12th, you are filing two forms, one form separately for 11th and one form separately for 12th. So if you are filing that two different forms, then, so that is what I'm trying to say here. For January 2020, the liability you had it for January 2020, but you delayed. Okay, you did not file anything, you delayed. Somewhere in April, you filed January return only, not April return, January return only. And there you declared this 1 lakh as a gross liability, 95,000 as the ITC and 5,000 as net. So you have to pay GST only on this 5,000 rupees because the law has been amended. But if you make a mistake of declaring January month nil return and in February declaring January's liability. So in February return, if you are declaring January's liability, it will not be on net balance. It will be on 1 lakh rupees only. Okay. So you have to take extreme care while filing your return. At no circumstance, you should go ahead and file your nil return. Okay. So you should declare it. Even if it is delayed, it is okay. After some days you file it, you will be able to pay tax only on the net portion. Okay. So now that is as far as this is concerned. Okay. Now this is we have come to the final topic. That is, there are some Kannada songs which says, tappu madadavru yaravre, tappu madadavru ellavre. But when it comes to tax laws, it is more than correct they do wrongs. So in every notice, officer would make one or the other mistake. Mistakes such as he would quote some wrong section number. He would ask you to do something that is not there in his jurisdiction. Now, what is jurisdiction? Now, every officer has right to do certain things. He cannot do everything. Okay, he could be a small level officer, or he could be a superintendent. He could be an assistant commissioner, deputy commissioner, joint commissioner. He could be commissioner himself. Everybody is given with some authority. They can do only certain things in GST law. They can't do everything. Okay, but they don't know they can't do certain things. Okay, that takes me back to one of the childhood jokes that we would share. that once for the very first time, when somebody went to the theater, he saw tiger on the screen and he got very frightened and he started jumping around, and somebody told, why are you jumping around? The tiger is in the screen, it can't come out. And he told, and I know that it can't come out, but tiger doesn't know it can't come out. What if it comes out? So similarly, the GST officers don't know, or any tax officers for that matter, they don't know whether they can actually do certain acts or they cannot do certain acts. For example, one of the interesting example is Section 67 of the GST law allows you to do something called as GST raid, what we call it as income tax raid, income tax search. Similarly, they can do inspection, search and seizure in GST also. That requires an officer to have something called as reason to believe, not reason to guess. So let us say for some reason I don't like Manoj sir, okay? And if I don't like him, I simply can't say, okay, let me go and do some GST search in his house. I have to have a reason to believe as to what contravention that Manoj sir has done. So GST law allows you to have only 3 types of contravention. Either he has not paid the tax, first type of contravention. Either he has claimed more input tax credit, second type of contravention. Or maybe he has secreted some books in his place, that is third type of contravention. So if I feel that Manoj sir has done any of these contraventions, then I have to give the warrant. I have to sign an authorization in some form called as INS1, and I have to send my officer to Manoj sir's house. But what is happening in today's era is an officer comes to his office, an officer that to not less than authority of joint commissioner and additional commissioner, and what he does is he keeps on signing, like he'll not even see who the SSE is. For him, it makes no difference whether it is Manoj sir or some other person. He just opens the signature page and he just signs and gives it. So he has the authorization format. If you look into it, it clearly says reason number 1, reason number 2, reason number 3. So officer is expected to put a tick mark to say that what is that reason. In 90% of the authorization, you will never find what is that tick mark. They will come to your place first. They will find what is the mistake, and after they find the mistake, then they will put that tick mark. Now, as an SSE, can you question this? Or should you say that if we question, the officer is going to take revenge? Now, this is one of the normal practice that we have. Why simply to fight with them? What if they take revenge? What if they, vengeance, all those things. So law clearly says, in section 160 subsection 2, it says, if you find an officer doing any mistake, raise the objection immediately. If you don't raise the objection immediately, at later point of time, you can't raise the objection. So on day 1, you receive a notice. It could be any types of notice. It could be a warrant also. If you find there is any mistake, challenge that particular notice on the day 1. Because you will not be able to challenge it on day 10 because section says, you can't challenge this. Similar is a provision even in income tax. You have it under section 292B, which says, if the officer has made a mistake and if he has given you a notice after 4 or 5 years, and if you feel clearly that he has given after limitation period is over, then you should challenge it saying that this is a time barred notice. But if you submit yourself to his jurisdiction, if you submit yourself to his authority, then at a later point, you can't come and say, that that officer did search without authority, that officer issued that notice without authority. In so many notices, in countless notices, they will send you a notice saying that verification of GST liability. And in that, he will say, bring your 26 AS, bring your books of account, bring your P&L account, bring your sales register, bring your purchase register. If you allow him, he will also ask you, bring your Jataka, bring that, bring this. Now the question is, should you go and submit all the document that he is asking, or should you question his authority? Because if you read carefully the GST law, it does not allow the officer to require all the documents. That too, in audit, it is permissible. In exercises like verification, he cannot ask for even single piece of paper from you. He will say, prepare reconciliation statement. Prepare reconciliation between your 26 AS and your P&L account. Prepare reconciliation between your GST return and your books of accounts. You don't have to. because no law requires you to do so. Just because in college you are taught how to prepare bank reconciliation statement does not mean that you have to use that knowledge and prepare all the reconciliation statement that he asked for. You can simply say, sir, I don't know how to prepare. Full stop, done. You can simply say, sir, what you are asking, we are happy that you asked, but you can't ask. Section 160 subsection 2 says, whatever I have to say, I have to tell on day 1. This is the day 1, so I'm saying this. We have observed in most of the circumstances, whenever we replied in similar manner by invoking section 160 subsection 2, the assessment have stopped then and there. So they say prevention is better than cure. So whenever it is possible, whenever you feel some notices are issued in contravention with any of the GST laws, don't say officer papa iddare sumne avarige yake madudu, raise this objection, because at a later point of time you will lose this opportunity. So these are the burning issues that I felt that I can cover in 1 hour, and now I'm open for questions. Thank you for your patient hearing.
Thank you so much, sir. It was indeed a very informative session, and we really liked it. Is there any questions to be asked? This is an open session for questions. If anyone wants to ask questions, please ask now. Anyone who have questions?
Anwesh, I have set of questions.
Yes, sir.
When we make a mistake, especially while filing returns, is there some penalty that we are supposed to pay?
No, the law is worded something like this. Even when you look at section 73 also, it says before the officer issues you show cause notice.
Okay.
If you correct your error, there is no penalty at all.
Okay, can I move to the second one?
Yes.
Suppose if I make a mistake and my mistake benefits government, is there a penalty?
Okay, let us talk about a scenario. Section 9, subsection 4. So earlier when the GST law came in, they said we want GST on everything.
Correct.
So if you are purchasing on a single day for more than 5,000 rupees and your suppliers are unregistered, on their behalf you pay. Correct. So if you are buying broomstick, if you are buying some samosa, tea, everything on a daily basis, if it is more than 5,000 rupees, you sit and calculate what is the tax on broomstick, what is the tax on chikki, what is the tax on all these things, and pay under reverse charge mechanism.
Okay.
And after a couple of months, they abandoned this. They said we are going to keep it in abeyance. But most of the taxpayers were never aware of this, that this provision has been put in abeyance. They still kept on paying this under RCM. So it is my mistake. Right. Government is being benefited from this. Okay. So now for this, there is no penalty. There is no penalty for this because I have not contravened anything. I have not collected it from somebody. I paid from my own pocket. So there is no penalty as such. But now the question is, can government keep this money with themselves? Because I made a mistake.
Correct.
Now there are two arguments in this behalf. One argument is, they say if you want refund, you apply within 2 years. If you are applying after 2 years, we will not give you the refund. That is what government says. Another argument what SSC would take is, Article 265 of Indian Constitution says no tax shall be collected without authority of law. So now, just because 2 years has passed, what authority you have to keep my money with you? So the law of unjust enrichment will still apply. So if government has benefited and if I can prove that government has benefited, I can always ask for the refund.
Okay. Okay, final question from my side. Now, initially when GST had come in, even the smallest of the small businessmen had issue with this law because they were good in doing business, not with technology, since it's a tech-based law. And definitely a small business would require the help of a chartered accountant. Now, now 5 years, obviously we had COVID also in between. Do you feel GST is settled right now? This is from the point of view of a chartered accountant, I'm asking.
Our life is settled because of all these complications. But as far as SSCs are concerned, it is not settled because government is not looking at a long-term picture. So in every month, they would change the law. They would change the rate.
Amendments.
And for every amendment, it is taken up to the court, and the court strikes down the provision. For example, recently there was in Rule 89, Sub Rule 4, which spoke about refund of tax. So in refund of tax, they had one provision which said, I cannot export an item for more than 150% of my domestic price. For example, if I am dealing in, let us say, some electronic item, okay, or some furniture item, for a local buyer, the same chair I may sell it for 1,000 rupees. But if there is a buyer from Australia, they say at maximum I can export him for 1,500 rupees, not more than that. If I do that, then again there was some restrictions as far as refund is concerned. So now this rule was inserted. Again, Karnataka High Court struck this down before 2 weeks. So now every provision what government introduces, court is striking down time and again. So because of all these things, law for the next 10 years, it is not going to be settled.
Okay.
So yes, but we are.
I think there are a few questions in the chat box.
Yes. My child has some income which has to be added with the income of parent whose income is higher, and both parents have exactly equal income. Then with whose income minor child's income is to be added.
I think that you can answer day after tomorrow, I believe.
Yeah, I would take up that. But again, you can add it anywhere. If officer does not agree, he is going to add it to other parent. Again, it will not make any difference. He has to give refund here and collect it there. Any parent would be okay. Yes. Is there any other questions, please? Can input tax credit be claimed on goods and services used for making nil rated supplies under Section 16(2) of GST law? No, nil rated you will not get it, sir. You will not get it because Section 16 starts with a magical word. It says every registered person subject to such conditions and restrictions.
Okay.
So it is like normally whenever we see an advertisement, they put small 1-star mark. So if GST is a banner, it is a banner filled with those star marks. There is conditions. The main condition for this comes in Section 17, subsection 2, which talks about when input tax credit will not be allowed. So if you are making a nil rated supply, or I may call it as an exempt supply, ITC is blocked, because only if you are making taxable further supply, you can claim the credit, or else you will not be able to claim the credit. Okay, it is a blocked credit. Even after the several has become more complex. What are the chances petroleum would get under GST? Now, because of the cap that is placed under Section 9, subsection 1, that says GST rate can't exceed 40%. It is highly unlikely that petroleum would be pulled into the GST regime. But again, normally what people feel is that when government says maximum 40%, it can be only 40%. But they don't understand. Government has this habit of, introducing something called a cess. So even if they bring petrol under GST, the price may not come down, because whatever the price because of GST would come down, they would take the price up because of this cess. They have this power to increase the cess. So earlier, the cess what we had, they said we are going to bring in only for 5 years. It is a compensation cess. Because state government is going to lose their revenue, to compensate them for only 5 years, we will have this cess. If you look into income tax, the cess concept when they introduced during the Kargil war, during the war time, they said that only till war we are going to keep it. After that we are going to remove. So we are in 2023. There is no war. The cess is still there. So here also that 5 year will never end. If you read how cunning this government is, whenever I say government, I'm not making any political statement. I'm only talking about this department. I'm only talking about executives, not political parties. How cunning this department is. In section 73, they say there is limitation period for us. What is limitation period? If Manoj sir gives me loan, and if for some reason I can escape for 3 years, and if Manoj sir does not file a case against me, after 3 years he'll not be able to recover. He can't file a case against me because it becomes a time bar debt. So there is limitation period for all types of transaction. All types of transaction. Even for GST also, can a GST proceeding can happen for like some 10-year-old case? They say no. So section 73 says only for 3 years we will assess. Only for 3 years. Now 3 years, yes, but from what date the 3 year will start? That is the question. So they said from the time of annual return date, the 3 year will start. Now question is, who decides annual return date? The government decides. So for 17-18, it is not the 3 year will end in 2021. So that due date was there in 5th of February 2020. So it was supposed to end on 5th of February 2023, at least for 17-18. We were all happy. So we were just, every day we would come, we would check the system. We were like, okay, 17-18, some wrong has happened because nobody knew GST provision back then. So officer also has time limit only up to 5th of February 2023 to issue the notice and conclude the proceedings and all. So we have not received the notices. We were happy. What this department has done is they have introduced a section called a section 168 subsection A, which says government has the power to extend its deadlines because of COVID. Now, for COVID, they will take this COVID excuse for next 4-5 years. They would extend all the due dates. So which was supposed to be on 5th of February 23, they have extended up to 31st of December 2023. Now, when we go to 31st of December 2023, mark my words, they're going to extend it one more time because there is no limitation as to how much they can exceed. So they will keep on extending it by virtue of these sections.
Okay.
So it is not going to become simple. And again, petroleum, even if it comes, don't expect the price will drop. They will never do that. So there is a question about what about zero rated supply? So zero rated supply means a taxable supply. Okay, so even when you look into section 16, which talks about what is or even if you look at the definition of what taxable supply is, it clearly says taxable supplies include zero rated supplies. So zero rated supplies basically means if I'm exporting it outside India or if I'm exporting it to SEZ, even if it is nil rated, for the purpose of input tax credit, it is taxable supply. I can claim input tax credit, no problem. I can claim input tax credit also. I can claim the refund also, no problem. I can do that. Yes. Any other questions?
Is there any other question? So there is one more. If a minor child has some, I guess it's the same that was there earlier.
With income higher, exactly same income. Anybody's does not matter. Anybody. Sir, I'll do, sir, one practical. If it is a practical scenario, declare 10 rupees extra in other income and add.
Correct.
It is theoretical. You write a note. It is assumed.
So I guess we can wind the session up.
Yes. Thank you for this opportunity, and it was lovely being with all the faculties once again after a long time. Thank you all for this opportunity.
Thank you very much, Anwesh sir. I request Mrs. Chetana Acharya, IQAC coordinator of Milagres College, to propose the vote of thanks.
A very good evening to all of you. As we have come to an end of the session, it gives me immense pleasure to deliver the vote of thanks. My very special thanks to the resource person of the day, CA Anwesh Shetty, for sharing his knowledge and explaining all the concept in a understandable examples and spending a very precious time with us. Thank you, sir. It takes immense pleasure in extending my sincere thanks to Reverend Father Michael L. Santumayer, Principal Milagres, Lobu, Principal, Padua College of Commerce and Management, Mangalore, and Dr. Shivaram, Principal of First Grade College, Kavoor, for their support in organizing the session. I extend my heartfelt thanks to all the participants for participating in the session. I'm very happy to extend my sincere thanks to Professor Manoj Lewis, sir, Mr. Cassin Rodriguez, Mr. Denzel De Costa, Mr. Raisen, and Mr. Johnston for helping us in organizing the session. Thank you. Thank you all. And one more thing, feedback form will be displayed on chat box. Please fill the form within 10 minutes. Certificates will be issued after attending and filling all the feedback form of the FTP. Thank you.
Thank you very much, ma'am. Yes, the feedback form is already put up here, so kindly fill it as early as possible. So I guess we can wind it up. Kasan, sir?